The 6-month Apple stock setup for momentum investors and long-term investors. The new iPhone is coming. Apple's first foldable iPhone is coming for sure, the iPhone Ultra. And Apple is finally getting serious about AI. And the biggest sales season of the year is around the corner. So the question is, do we buy before all of this happens? Because today I'm going to show you why Apple could be setting up for a very, very interesting run into September and potentially all the way through the holiday season. And now Apple is showing some very interesting signals in the chart. And we're gonna check different entry and exit scenarios along the next few months. So guys, let's get into it. Number one, Apple is already delivering. Before we talk about what's coming, let's talk about what's already happening. Apple's latest numbers were strong. Revenue is growing double digits, iPhone sales are growing strongly, and services continue to hit record highs. And that's important. We are not betting on a turnaround company or a struggling company. We are already looking at an already extremely profitable company which is entering a complete new major product cycle. Apple, for first time since many years, is becoming more innovative again. And that's a complete different investment thesis, guys. Number two, September is the first catalyst. Every investor knows Apple launches products around this timeline. So another iPhone by itself isn't enough for me to buy the Apple stock. But this year could be different and more interesting because we are expecting to see the next generation of premium iPhones, and there are reports that Apple will introduce its first foldable iPhone, the iPhone Ultra. And that's important because we are not simply talking about a faster processor or a slightly better camera. A foldable would give Apple an entirely new premium product category. And then we have AI. Yeah, Apple has been criticized for being late to AI, and that's fair, they messed it up. But Apple doesn't necessarily need to win the AI race for the best AI model. What Apple has is distribution. Billions of active devices. So if Apple can integrate AI deeply into the iPhone, the Mac, and the rest of its ecosystem, suddenly AI becomes another reason for hundreds of millions of customers to upgrade their hardware. And this is where it becomes very interesting for me like an investor, guys. Number three, September isn't the end of the trade. And here's something very important, guys. I'm not necessarily looking at Apple as a trade that ends after the September event. September could simply be the beginning because after the product launch, Apple has one of the most important periods of the year, the holiday season. New iPhones hit the market. Black Friday, Christmas, holiday spending, and historically, this is extremely important for Apple. I personally always buy Apple stocks before the holiday season if I get a good entry. Just look at the last holiday quarter. Apple generated approximately 144 billion revenue, an all-time record. iPhone revenue alone reached approximately 85 billion, also a record. And earnings per share increased 19%. So if the new products lineup is received well, the investment thesis doesn't necessarily stop with the September announcement. The next catalyst becomes how strong are the holiday sales, and then what do those numbers look like when Apple reports its December quarter earnings around the end of January. And number four, then there's the ecosystem. And underneath all of this, we still have one of the strongest business models in the world, because Apple isn't just selling you an iPhone. No. Once you're inside the ecosystem, you have iCloud, Apple Music, Apple TV, the App Store, Apple Care, AirPods, Apple Watch, Mac, and potentially more AI-powered services in the future. Apple now has more than 2.5 billion active devices installed worldwide. That's enormous customer base, and Apple can continue monetizing. And that's why services is so important. Hardware brings customers into the ecosystem, but services keeps monetizing them. Number 5, what could go wrong? Okay, of course, this isn't guaranteed. Apple isn't cheap, and if the September products disappoint, expectations can come down quickly. And if consumers don't upgrade, the holiday season becomes weaker. So I'm not buying Apple simply because September is coming. I want 3 things lining up. First is strong fundamentals, a catalyst, and technical confirmations. We already have the fundamentals. We potentially have several catalysts ahead, and now let's look at the final piece, the chart, guys. Let's go into the chart.
Guys, right now we are in the chart of Apple AAPL and we are at a really good price level right now. But before we talk about the different scenarios, I want to tell you one very important sentence that my boss said me since I started working back in the early 2000s for the investment bank. And it is luck favors the prepared mind. Don't forget it. Luck favors the prepared mind every single life. So, and I like to go prepared into what's gonna happen or what could be happen. So I gotta be prepared for every scenario. That what you should do too. So right now, we are at $305. So we had really good earnings over here. We already talked about it. So we saw it here. We had record revenue and EPS growth, et cetera, et cetera. And the market dropped. Maybe the people who tried to anticipate this earnings didn't see a up move after earnings and just liquidated their positions. That's why we went down. And that was a great, great gift because around $300 right now, 310 or maybe less is a perfect entry level before we come to the September season, the product launches, and the winter season. So the scenario could be two. The most investors just buying blindly, they don't care about the price, but that's not my approach, and that shouldn't be your approach because only $10, $20 different make makes a big, big difference. Imagine you have 100 shares and you miss $20. You can calculate by yourself. So $20 better entry or better exit makes a big difference. That's why, for me, besides the fundamentals, the chart analysis is very important to me. So let's go to the scenarios. I'm talking too much. I'm sorry, guys. So the best scenario, what I would like to see, the probability that that's going to happen is not really high. That we drop back to the 200-day moving average at the $280 level, or until the $275 level, where also is the volume point of control. But we shouldn't drop below this level. The possibility that this is going to happen is pretty low, but if it's going to happen, it's like I feel like a kid in a candy store. It will be perfect. So let's picture it for you. So we're going to get a drop below the $300 level. That's like a slight support level in the hourly chart, and we drop below this level and go down to 280 or maybe 275. So this is a strong support level. 200-day moving average, the 200-day average price. That would be the best case scenario to buy at 280, waiting for a turnaround signal, maybe in a smaller time frame, and then buy from here and let's go. That would be the perfect scenario. I gotta think we're gonna break out over the all-time highs for sure, or pretty sure, never 100%, but I would say like the possibility is like 90% because I'm gonna put it in the picture right now is the first quarter earnings. So what we're gonna see on the picture right now is we see the actual earnings per share is 2.02. And you see the red circle, this is gonna be the first quarter of next year after the winter or holiday season. And Apple every time delivers amazing, amazing earnings in January, end of January. So, and we're gonna see the net income before taxes. Right now we are at 36.27 billion. That's actual, and we're gonna go at around about 50 billion expected in the first quarter earnings. That's why I believe highly that we're gonna lift the all-time highs, maybe before, maybe later, but it will be a great, great catalyst for this stock. Okay, next scenario, guys. Just for information, let me delete this arrows. Let's say my kid in a candy store situation doesn't become true. We have another scenario. So we could wait until we break out over the $320 level. That would become like a double bottom of the correction over here, this $300 level. And we would break out over this level here, this $320. So that would be a nice entry point to hitting to the all-time highs. And maybe later, lifting the all-time highs, maybe a slightly correction, and then lifting the all-time highs. I think after the September event, we're gonna get a great push anyway, but maybe in October, November is coming a slight correction. So you have the possibility to go enter the trade here or down here and just hold it until the end of January, or you can exit the trade, like in a scenario like this, take your money, wait for a correction, and enter the trade again for the breakout over the all-time highs. It could be also we break out before over the all-time highs, and then we gonna make, oh shit, I'm sorry for that. We break out before, and before the earnings are coming, we gonna get a pullback to the all-time highs, and then we get up, and then we get the next move upstairs. That might be also an option, but so you can exit the trade and enter again, or just buy it at the right moment and hold it until the first quarter results are gonna be coming out. So what I'm looking for, I want to go in even tighter before you're gonna break the $320 level, and I gonna do it maybe in the 1 hour chart. Let me pull up the 1 hour chart over here. That would be a scenario for me for get the best price possible. For you, I would recommend you stay in the daily chart, but I just gonna tell what I'm gonna do. If we gonna go over this level here in the hourly chart, well, it should be red. This $310. If you're gonna lift this level, I was already waiting for it on Friday, but didn't happen. It would be already a first entry for me. But if we drop below this level down here, you already know we're gonna wait until we get a correction in the daily chart, where we're going back right now before we are finished. So if we get this one here, we're gonna wait for the more correction, and this is gonna be my kid in a candy store situation. Maybe we're going only till 290 or 280, whatever. That would be the best case scenario. But you have many, many possibilities to enter Apple at a really good price right now. But you shouldn't miss the $320. After that, it might be too late. And just for your information, guys, it's not a financial advice. It's just my way, how I would do it, to give you an idea what you could do, guys. So let's go back to the video, guys.
And that's my Apple setup. I'm not buying Apple because a new phone is coming. Everybody knows that. I'm interested because several catalysts could line up one after another. First, the technical setup we are seeing right now. Then the September product event. Then the new iPhone sales cycle. Then the holiday season. And finally, Apple's December quarter earnings in the end of January. So instead of just looking On a single catalyst, I'm looking at a potential 5 to 6 months investment window. And that's an important difference because the fundamentals tell me what to buy, but the charts tell me when to buy. And right now, both are starting to point me towards Apple. And if the technical confirmation happens, Apple could become one of my more interesting setups heading into the end of the year for my $1 million challenge and my own and customer portfolios. Guys, see you next video. Peace out. Sascha.